The financial world can be tough to understand, so we're helping you navigate it. And today we're talking about lines of credit. It's financial freedom with Members First Federal Credit Union. Jeff Ernst is with me today. Now, Jeff, more specifically today, you're going to be talking about how the money that we have in our homes can influence our line of credit. We can actually take advantage of that, and
Absolutely,
how.
absolutely. So we all work very hard to pay our mortgages off. And so as we do that, we develop some wealth within our houses. So that can be 10, 20, 50, $100,000. So the key is to try to get access to that wealth. So through a home equity line of credit, you can immediately turn that equity into cash, pay for things like college tuition, do home improvements, pay for weddings, pay for, more importantly, high interest credit debt that you may have. You can pay that off with a lower interest line of credit.
So the interest would be lower than if you, say, put something on a credit card, like you can put college tuition on a credit card.
Sure, and I wouldn't recommend that, right? So if most of our credit card rates are 15, 18, as high as 25%. A home equity line of credit will have an interest rate somewhere between 5 and 10%. Often, if your credit's very good, with rates dropping like they did yesterday, you could get a 4.75 rate. So there's an ability to save thousands of dollars by putting your debt at a much lower interest rate than, say, a credit card.
That's really interesting. Once you establish this line of credit, how do you access that money?
So we all do our banking on mobile phones these
Sure.
days, right? And our iPads and our PCs. You can still go to the branch, but by simply going into your phone, logging into your account, your line of credit really becomes almost like another savings account. So you can simply transfer that money into your checking account and immediately use it. Even if you're at Best Buy buying a hot water heater, you can go into your account right there, transfer it into your checking account, use your debit card, walk out of the store with a hot water heater.
That's remarkable. I mean, this can be, I know it's going to sound dramatic, but like life-changing for some people, and the way they budget and the way they pay for things in their family. If somebody watching thinks, oh, okay, I didn't know about this, because to me this is a bit new information. I'm sure it is for other people. If they're interested maybe in learning more about this, how they could possibly open a line of credit, what should they do at that point?
Yeah, so it's typical loan application process. If you go online, it takes 10 minutes to put a loan application in. Members First representative would call you in the next day or two, walk you through the entire process, help you go through whatever you need to do to get the line established. Only takes about 2 or 3 weeks total. And then once you have the line established, it becomes yours, and you can use it for the next 10 years whenever you need it. As we said, it's very easy to transfer the money. So it's there when you need it for an emergency or to pay off some debt that you might be carrying a balance on.
Is there any danger in pulling money from your home equity? Like, it's there, it's yours, it's never going to go away, right? It's not like you could owe it back, right? Like,
well, it is a loan.
It is a
So you
loan.
do have to pay it back.
Okay.
But paying back a 5% interest or a 6% interest loan versus a credit card where it might be 20, 25%, you're saving thousands of dollars.
Thousands of dollars.
So I recommend using it for high ticket items, and when you're going to carry a balance from month to month to month, it's a very good vehicle to take advantage of your equity.
Very good. Thank you so much. So
Thanks.
interesting,
Thanks
Jeff.